Have you ever gotten really, really mixed signals from someone? Well, that's pretty much what's happening right now with the Federal Reserve, the folks who control the nation's money supply. They're saying one thing, but then they're doing something completely different, and it's got everyone from Wall Street traders to people just trying to buy a house totally confused. So let's try and cut through the noise and figure out what the Fed is saying, what it's actually doing, and most importantly, why any of this matters for your wallet. Okay, so check this out. This is the heart of the confusion right here. The Fed comes out and announces an interest rate cut. Now, that's supposed to make borrowing money cheaper for everyone, right? But look at what happened in the real world. The average mortgage rate didn't go down. No, it went up. It jumped 20 basis points. And no, that's not a typo. The Fed cuts rates and your potential mortgage just got more expensive. How does that even work?
So yeah, what on earth is going on here? How can the official action from the most powerful financial institution on the planet lead to the exact opposite result on the street? That's the big mystery we are going to unpack right now.
To get to the bottom of this, the first thing you have to understand is that the Fed isn't one person with one single opinion. It's actually a committee. And right now, that committee is basically a house divided against itself. You've got two main factions, the hawks and the doves, and they are in a major disagreement about where the economy is headed. And this slide lays it out perfectly. It really all comes down to what they're afraid of. On one side, you have the doves. They're looking at the job market, seeing it start to weaken, and they are terrified of a recession. So for them, the answer is simple. Cut interest rates, make money cheaper, and get the economy humming again. But then you've got the hawks. They're looking at the price of groceries, of gas, and they fear that inflation is going to stay way too high. Their solution? Don't you dare cut rates. Keep them right where they are to keep prices from getting out of control.
The Doves have some powerful allies, including the administration. Here's Treasury Secretary Scott Bessent. And he's basically saying, look, parts of the economy, especially housing, are already in a recession. He thinks the Fed could fix this and help out regular people who are struggling just by lowering rates.
But the hawks are pushing back, and they're pushing back hard. Lori Logan, the Dallas Fed president, is one of their main voices. And her take is, hold on a second, inflation is nowhere near our 2% target. So from where she's sitting, cutting rates right now would be a huge mistake, one that could let inflation come roaring back.
And this just shows you how deep the split really is. The recent rate cut, yeah, it passed, but it was anything but a consensus. The vote was 10-2. You had a hawk, President Schmid, who voted for no change at all. But then, on the complete other side, you had what you might call a super dove, Governor Minoran, who voted against it because he wanted a much bigger half-point cut. I mean, they're being pulled in completely opposite directions. But all this public fighting, this whole hawks versus doves drama, it's really only half the story. Because while everyone was watching this debate play out, the Fed was making another, much quieter, and arguably much bigger move behind the scenes. And this is the key. All that public arguing kind of served as a perfect distraction. It kept all of our eyes on that one little rate cut decision. But in the background, something way bigger was going on that tells a totally different story about what the Fed is really worried about. $29.4 billion. On Halloween, while the whole world was debating that tiny quarter-point rate cut, the Fed quietly pumped nearly $30 billion of new cash directly into the banking system. So how'd they do it? They used something called overnight repo operations. Now, it sounds super complicated, but just think of it like this. It's a super short-term loan to banks. The banks hand over some safe assets, like treasury bonds, and the Fed gives them cash for the night. It's basically a way to make sure the plumbing of the financial system doesn't get all jammed up. It's a stability boost.
And let's be clear, this wasn't just a normal, everyday operation. This was the single largest injection of cash the Fed has made in one day in over 5 years. The last time they did something that's big was during the emergency chaos of the 2020 pandemic. So yeah, this is a very big deal.
So, what does a secret $30 billion cash injection tell us? Well, a few things. First, it's a huge red flag that there might be some real stress building up in the banking system, especially since bank reserves are at a 4-year low. Second, it just completely contradicts their tough talk about fighting inflation. I mean, you don't pump that much cash into the system if your only worry is an overheating economy. And third, it shows this massive gap between what the Fed says in public and what it's actually doing in private. To really make sense of all this, we need to zoom out for a second. The Fed isn't making these decisions in a bubble. There are some really powerful forces putting a ton of pressure on them from the outside,
creating this super complex situation that we need to untangle.
And this table lays it out pretty clearly. You've got pressure coming from three directions. There's intense political pressure, with the administration publicly calling them out and demanding more rate cuts. Then you've got the market itself, where investors were basically betting with 100% certainty that another cut was coming. And maybe the most important piece, there's this big push happening at the same time to weaken the Fed's own power to regulate the very banks they're now secretly propping up. And look, this isn't just talk. Check out the timeline. Over the summer, you had the Treasury Secretary trash-talking the Fed for institutional bloat. Then, Michelle Bowman, who is known for wanting less regulation, gets put in charge of bank oversight. And then, get this, just one day before that massive secret cash injection, the Fed itself announces it's cutting its own bank supervision staff by 30%. 30! They're actively getting rid of the people whose job it is to see what's going on inside the banks. So, with all this chaos, this internal division and external pressure, what does the head of the Fed, Jerome Powell, have to say about it all? Well, he came up with a metaphor that is both pretty insightful and honestly a little bit terrifying. And what's making everything even worse is that because of the government shutdown, there's a data blackout. The Fed's literally isn't getting the critical reports on jobs, on inflation, on economic growth, all the stuff they need to make smart decisions. They are, for all intents and purposes, flying blind.
And that brings us to Powell's metaphor. He asks, what do you do if you're driving in a fog? You slow down. That's his justification for the small rate cut and all his cautious language. He's saying, hey, it's so uncertain out there, the only responsible thing to do is to just gently tap the brakes and proceed with caution.
But you have to ask yourself, is that really what's happening? When your own team is at war with itself, when you're making massive secret moves that contradict your public stance, and when you're getting squeezed from all sides, is the Fed really just slowing down with a clear destination ahead? Or is it actually just lost in the fog, spinning its wheels with no idea which direction is forward? At the end of the day, the only thing that seems truly clear is the uncertainty itself. The signals from the Fed are as foggy as it gets. And for the rest of us just trying to figure out our financial lives, well, it looks like we're all going to be driving in that fog for a while.